Most traders remember the day the market bled red. Screens glowed like a battlefield, charts dripping with collapsing candles, and hearts pounded as fear spread across every trading desk. Amid that chaos, one man closed his laptop in silence. His name was Cain, a trader unknown to Wall Street, but soon to become legendary. On his prop firm dashboard, a number shimmered: $2.3 million payout. It wasn't fiction, and it wasn't luck. Just a month earlier, his account sat at $130,000. Now, it had transformed into the largest single payout in proprietary trading history. Yet there were no champagne bottles, no social media screenshots, no grand celebration. For Cain, it was simply the next step in a process he had spent years shaping from failure and discipline. The secret wasn't an all-in gamble or a hidden algorithm. Cain called it base hits, small, consistent wins stacked one after another. While most dream of home runs, the one perfect trade to change everything, he chose repetition, restraint, and patience. That philosophy turned disaster into dominance. This story begins not with glory, but with ruin. Cain survived the collapse of FTX, watching nearly four-fifths of his net worth vanish in days. Instead of quitting, he rebuilt from the ashes, mastering futures markets where structure replaced chaos and discipline could finally thrive. What followed was more than a strategy. It was a transformation. Over 12 chapters, you'll walk his path. From devastating losses to record-breaking payouts, from the pain of drawdowns to the calm of monk-like discipline, you'll step inside the mind of a trader who proved the real battlefield isn't the market, it's within. Imagine opening your trading account one morning and seeing a payout so massive it would rewrite your future in an instant. Cain lived that moment when his prop firm dashboard displayed a record-shattering $2.3 million withdrawal. Traders across the world would have erupted in celebration, ordering champagne, flashing screenshots on social media, or racing off to buy cars. But Cain's reaction stunned even those closest to him. He quietly closed the screen, took a deep breath, and prepared for the next trading day. For him, success wasn't a jackpot. It was simply another step in a carefully crafted process. Cain didn't come from Wall Street, nor was he groomed in the polished corridors of hedge funds. Before trading, he worked in a cubicle as a tech salesman, dressed in stiff shirts, meeting monthly quotas, and wondering if life had anything more to offer. What set him apart was never his resume. It was the quiet fire that refused to accept limits. The thought that his potential could be capped by a paycheck pushed him toward the market's uncertain battlefield. The road, however, wasn't paved with easy wins. It was littered with losses, self-doubt, and nights where quitting would have been the easier choice. Trading futures meant sitting before glowing charts, each candle carrying the weight of thousands gained or lost in seconds. For most, every tick raises blood pressure. Every red candle feels like betrayal. But Cain discovered his edge, not in chasing chaos, but in his uncanny ability to wait. He could sit for hours without touching the keyboard, still as stone, while thousands of others drowned in noise. That patience became the cornerstone of the lab, the trading community he later built, not around signals, hype, or the empty thrill of gambling, but around discipline and presence. His followers watched him trade live, waiting in silence until the perfect setup appeared. Many found the stillness unbearable. Cain found it liberating. From an account balance of $130,000, Cain grew to over $1.4 million in a month, eventually amassing more than $3.5 million in payouts across firms. Yet ask him about those milestones, and he dismisses them with a shrug. To him, consistency defines success, not dollar signs. The withdrawal is nothing more than evidence of discipline applied day after day. Perhaps most telling is how he speaks of his wins alongside his losses. He recalls the sting of holding a winning trade too long, watching $50,000 in profit dissolve because greed whispered just a little more. That scar taught him more than any victory could. From then on, he vowed to take the meat of the move and leave scraps for others. This is the paradox Cain embodies. The less he chased money, the more it came to him. The more he chased process, the more results followed. It is a mindset shift that separates gamblers from traders. Chasing payouts is gambling. Chasing rules is trading. And in that difference lies the foundation of Cain's rise from ordinary office worker to record-holding legend. The screen glowed cold blue as the numbers bled red. In a matter of days, Darren Cain watched nearly 4 out of every $5 vanish from his account. 78% of his net worth gone, erased in the brutal collapse of FTX. Imagine the weight of that silence. Charts falling like knives, withdrawals frozen, and the disbelief that what was once wealth had dissolved into dust. Cain had made big wins before on XRP and other tokens, turning small bets into windfalls. He felt invincible. But that confidence, he realized too late, had been poisoned by complacency. Early success is a dangerous drug. It whispers that you've cracked the code, that losses belong to other people. Cain had believed that lie. And when the implosion came, it wasn't Bitcoin or a broken chart pattern that destroyed him. It was his own certainty. Jesse Livermore's words echoed in hindsight. It's not the market that beats you. It's your own complacency. The pain was physical. His palms sweated. His chest tightened. But he refused to exit positions because belief still clung to him like a curse. The market has to come back, he told himself, even as the candles fell harder, even as news of frozen withdrawals spread like wildfire. Then it was over. 78% gone. What remained was silence louder than any trading alert. A silence filled with shame, anger, and disbelief. Most would have quit there. Many did. Some cursed the market. Others blamed the exchange or Sam Bankman-Fried. But Cain turned the blame inward. He saw, in that devastation, a choice: surrender or own every mistake. And he chose ownership. That single decision transformed the collapse from a grave into a forge. Instead of seeing losses as theft, he began to see them as tuition. brutal, expensive lessons in survival. Cain began asking himself hard questions. When was the last time he had taken full responsibility for a bad trade? How often had he excused losses by pointing at the news, or bad luck, or manipulation? The honest answer cut deep, too often. From then on, excuses were banned. If he lost, he owned it. That ownership didn't heal the wound, but it stopped the bleeding of self-deception. He often jokes now that crypto taught him how to lose, but futures taught him how to live. The difference was not in the volatility, but in the structure. Crypto demanded constant vigilance, dragging him into endless screen watching at 3 in the morning, chained to alerts, checking prices in restaurants, even in bed. Futures offered boundaries. Markets opened, markets closed. He could step away, reset, breathe. That shift gave him something no prophet ever had: rest. From the ashes of FTX, Cain found the steel of discipline. He abandoned the illusion of easy money and embraced the grind of structured markets. He discovered that rest was not laziness, but a weapon. That responsibility was not punishment, but liberation. The collapse that wiped him out became the very foundation of the trader he would become. Why would a man who had already lost nearly everything in crypto walk away from the very market that had once promised him riches? For Darren Cain, the answer was not greed or thrill. It was survival. After the FTX collapse, he realized he couldn't endure another battlefield where the fight never ended. Crypto was open 24 hours a day, 7 days a week. There was no pause, no rest, no mercy. Cain's eyes were always glued to charts, in bed at 3 a.m., at dinners with friends, even in the back of a taxi. The market consumed him. He began to see the toll not in his account balance, but in his spirit. Endless vigilance had left him exhausted, anxious, a prisoner of his own phone. He compared it to a casino without clocks, where the air pumps oxygen to keep you playing until collapse. Crypto was that casino. No daylight, no rhythm, only the constant pull to stay inside until your soul was spent. Futures, however, whispered a different story. Unlike crypto's endless noise, futures traded in sessions. London, New York, Asia, each with an open, a close, a rhythm like the breath of a living thing. That rhythm gave Cain what he desperately needed: boundaries. Boundaries meant rest. Rest meant clarity. And clarity meant survival. Imagine 9:15 a.m. New York time. The futures markets begin to hum. Cain sits at his desk, coffee warm, monitors ready. But instead of chasing every tick, he waits. He knows the 9:30 open will bring a surge of liquidity and a burst of volatility. In crypto, the chaos had been constant. Here, the chaos had a schedule. It could be studied, anticipated, planned for. Suddenly, the market wasn't a storm that never ended. It was a match, with rounds, with a bell. He remembers calculating once, during his crypto years, how many hours he had truly spent watching charts. The answer was crushing. If he divided his profits by the sleepless nights, the anxious meals, the stolen moments, he realized he had earned less than minimum wage. That realization cut deeper than losing money. It meant he had been trading his life away, minute by minute, for scraps. The pivot wasn't easy. Walking away from crypto felt like betraying the dream. Every story online was still about overnight millionaires. But Cain had seen behind the curtain. He had seen the exhaustion, the ruin, the families neglected, the traders found asleep at their desks with phones still clutched in their hands. He didn't want that future. He wanted a battlefield where discipline could win. So Cain rebuilt his routine around the structure of futures. He studied session, opens like rituals. He journaled patterns of liquidity like a monk copying scriptures. He trained himself to act only within those windows of opportunity. And when the bell rang, he walked away. To outsiders, it looked like he was doing less. But inside, he knew he was building the stamina to last. Futures became his sanctuary. The open and close of each session became his heartbeat. The boundaries gave him more than profits. They gave him back his humanity. And in that rhythm, in that structure, Cain found the turning point. He wasn't just surviving anymore. He was finally learning how to live. The market leaves footprints. That's what Darren Cain believes. Not predictions, not promises, but recurring patterns that whisper where liquidity hides. He says the job of a trader isn't to be a fortune teller, but a detective, learning to spot the same trails left by institutions again and again. And when you learn to listen to those whispers, the edge appears. For Cain, that edge lives in three interconnected concepts: the power of three, SMT divergence, and psychological price levels. Each one is simple enough to explain, yet together they form the blueprint that rebuilt his career from ashes. The power of three is Cain's favorite metaphor. He calls it the three-act play of every market session. First comes accumulation, the quiet gathering of orders, the calm before the storm. Next comes manipulation, the deceptive thrust that tricks the impatient, a false breakout that snatches liquidity. And finally comes distribution, the real journey, the market's true direction revealed. Cain insists this pattern has repeated for centuries across commodities, equities, and now futures. You don't predict it. You recognize it, like recognizing the rhythm of a song you've heard 1,000 times. Layered on top is SMT divergence, the smart money technique. Cain explains it through a simple comparison. Two markets that usually dance together suddenly fall out of step. For him, it's the NASDAQ, NQ, and the S&P 500, ES. When one breaks a high and the other refuses to follow, Cain sees a tell, like a poker player tapping his foot unconsciously. It's not confirmation of direction, it's evidence of manipulation. That's where he strikes. Then there are the psychological price levels. Round numbers, half ranges, the places where human minds cluster their decisions. 15,000 on the NASDAQ, 4,000 on the S&P. Even the 50% midpoint of a daily range. These levels act like magnets. Institutions know it, and they hunt liquidity there. Cain laughs when retail traders scream, "Breakout," above a round number because he knows what's really happening. Stops are being cleared. Fuel is being gathered. Put them together, and you see Cain's complete setup. Picture a morning in New York. The NASDAQ climbs toward 15,000, a glowing psychological line. Retail traders lean forward, eyes wide, ready for the big breakout. NQ surges through 15,000. But Cain doesn't move yet. He glances at ES. Nothing. ES refuses to follow. That's SMT divergence. Then NQ forms a sharp wick above the level, liquidity swept. The manipulation phase of the power of three is complete. At 10:01 a.m., Cain clicks short. He doesn't aim for the collapse, just the walk back to equilibrium, the 50% retracement of the range. Minutes later, the chart delivers, and Cain exits. Another base hit, another calculated win. He reminds his students of the paradox. Traders lose money chasing what looks exciting. Breakouts, parabolic moves, headlines. But his fortune was built on fading excitement, on taking the trade when others are blind with greed or fear. While most traders crave home runs, Cain stacks base hits. While they seek glory, he seeks probability. If you've ever been caught in a false breakout, watched a candle explode through a round number, only to reverse the moment you enter, then you've felt exactly what Cain exploits. The difference is, he's on the other side of that trade. Cain's edge is not about conquering the market, but about aligning with its nature. Markets manipulate before they deliver. They sweep liquidity before they move. They respect psychological anchors because traders respect them. His job is simply to wait until those elements align. He tells his students, the market isn't uncertain. It's always telling you a story. The only question is, are you patient enough to wait for the story to finish Act 2 before trying to profit from Act 3? That edge, power of 3, SMT, divergence, and psychological levels doesn't guarantee every trade will win. But it stacks the probabilities so heavily that consistency becomes inevitable if discipline holds. Cain calls it the art of listening to whispers at levels where most traders are shouting. It's not magic. It's not luck. It's repetition, patience, and the willingness to see the market for what it truly is. A stage, a game, a puzzle that rewards those who stop fighting and start watching. Darren Cain often says that if discipline is the soul of trading, then position sizing is its skeleton, the hidden structure holding everything upright. Without it, even the sharpest strategy collapses under its own weight. Cain doesn't measure trades in terms of how much he could make if he's right. He measures them in terms of how much he can survive if he's wrong. That simple inversion changed his entire career. Most traders ask, what's my potential profit? Cain asks, what's the smallest loss I can live with? His framework is deceptively simple, a fixed fractional approach. Every trade risks only a small fraction of total capital, small enough that any single loss feels like a scratch, not a wound. On base setups, he deploys minimal risk, just enough to test the waters and stay in the game. But when multiple edges align, when daily bias matches higher time frame structure, when SMT divergence forms at a psychological level, then and only then does he scale in, building positions piece by piece. Cain compares it to a surgeon making careful incisions rather than swinging wildly with a machete. He enters small at first, like a probe. If the market confirms, he layers in again and again, each addition only after evidence strengthens. If the first probe is wrong, he takes the scratch, and walks away intact. If it's right, the position blooms into something powerful, but never reckless. One of Cain's iron rules is this: never, ever average down into a loser. To him, adding size into a bleeding position is like pouring water into a sinking ship. It might keep you afloat for a moment, but eventually you drown. He only scales when the market confirms, never when it contradicts him. This isn't stubbornness, it's survival. He drills his students with a simple exercise. Calculate your maximum risk per trade, then cut it in half. Trade at that reduced size for a month. At first, they complain. The wins feel smaller, less satisfying. But by week's end, they're shocked. Their stress levels plummet. Their decision-making sharpens, and their consistency improves. Cain laughs when they finally see the truth. Most traders are suffocating under their own oversized positions. He knows this because he lived it. Early in his career, Cain took a textbook trade on crude oil. Every indicator aligned, every rule checked. Brimming with confidence, he quintupled his usual size. He was convinced the setup couldn't fail. But the market doesn't care about conviction. Out of nowhere, news hit. Oil spiked against him. In 3 brutal minutes, he lost everything he had built over 3 months. That day, he swore an oath. Position size would never again be dictated by how right he felt. Only math would decide. Cain emphasizes that risk is never just about numbers. It's about psychology. Oversized trades sabotage the mind. Fear tightens your chest. Greed whispers louder. Patience evaporates. You no longer see charts. You see survival. And survival thinking makes you impulsive. But when your size is small enough to breathe, the mind returns to balance. You can think clearly. You can act like a trader instead of a gambler. His genius is not only in technical skill, but in protecting mental capital. He treats his brain like another account to be preserved. He refuses to let one trade overwhelm his emotions. He would rather miss a monster win at small size than risk a meltdown by swinging too big. Alexander Elder once wrote, "Risk management is the art of surviving 1,000 cuts." Cain embodies this idea. His millions didn't come from a few dramatic jackpots, but from countless small wins, scratches, and controlled losses. The victories compounded because the skeleton of position sizing held his discipline together day after day. He often tells his students, you can survive bad entries, bad markets, even bad strategies for a while. But you cannot survive bad sizing. Position size is the silent killer of traders. Ignore it, and no edge will save you. This is why Cain's students remember him not for fireworks, but for the quiet mantra he repeats like a monk. Protect capital first. Scale only when everything aligns. Never add to losers, and let math, not emotion, decide your risk. One December morning, Darren Cain sat at his desk with the same quiet focus he brought to every session. There was no champagne, no thrill, only the hum of monitors and the steady rhythm of his breathing. What he didn't know was that this day would etch his name into trading history. The setup that unfolded would become the clearest, sharpest expression of his process, the $1 million trade. Cain had spent weeks preserving his capital through base hits, scratching small losses, and waiting patiently. His discipline kept him sharp, and his risk light. That morning, the daily bias aligned bearish. Higher time frame structure confirmed it. He drew his levels with care, noting the 15,250 mark on the NASDAQ as a psychological magnet and the previous day's high. He marked it not as a prophecy, but as a battleground where liquidity would reveal itself. The opening minutes passed with noise, false surges, and twitching candles. Lesser traders might have jumped in, eager to ride the first wave. Cain waited. 20 minutes. 25. 28. Then it began. The NASDAQ lifted toward his marked level, climbing with volume. Breakout chatter filled chat rooms, social feeds, and even the news tickers. To the untrained eye, it looked like strength. To Cain, it smelled like bait. He checked the S&P futures. They were lagging, refusing to confirm. SMT divergence, the tell. When NASDAQ pierced above 15,250, he didn't chase like the crowd. He saw the wick form, the rejection, the manipulation phase completing. He acted. First entry, 2 contracts, light and probing. Price dipped in his favor. He added 3 more. Confirmation deepened. Another addition. Soon, he was holding 10 contracts, the largest position of his career, but built brick by brick, never all at once. And then came the waterfall. Price didn't simply drift lower, it collapsed. Every support cracked, each rebound attempt failed. Candles cascaded downward in long green profit bars flashing across his screen. 10 points, 50 points, 100. His P and L bloomed into numbers most traders only dream about. He didn't cheer, didn't screenshot, didn't call friends. He just breathed. His eyes stayed on his predetermined target, the 50% retracement of the daily range. No greed, no hope, only execution. When price struck his mark, he closed. The tally was staggering. Over $1 million on a single trade. Not a gamble, not luck, but the culmination of years of discipline, endless hours of backtesting, and scars from blown accounts. Yet his reaction revealed his true edge. He didn't increase risk the next day. He reduced it. Because Cain knew the poison hiding inside success. Complacency. The market, in its cruelest trick, punishes traders more after their wins than after their losses. Victory breeds arrogance. Arrogance invites disaster. Cain refused that path. The very next day, he took a controlled loss and welcomed it like a reminder from the market. You are not invincible. When students asked him about the $1 million setup, he always answered the same way. Everyone sees the payday. Nobody sees the 1,000 hours of preparation. That trade wasn't made in December. It was made in every boring moment I chose process over profit. Every loss I journaled. Every rule I followed. The legend wasn't the money. It was the patience, the faith and preparation, the courage to wait 28 minutes for a single shot, and the humility to step back after triumph. The $1 million trade wasn't destiny. It was discipline, crystallized in a single perfect storm. Every trader, no matter how skilled, knows the silent enemy that waits in the shadows. Fear. It hides in the click of the mouse, in the racing pulse, in the desperate whispers that say, Don't lose this one. Darren Cain calls them the four primal fears: the fear of being wrong, the fear of losing money, the fear of missing out, and the fear of leaving money on the table. Conquer them, he insists, or the market will conquer you. The first fear, the fear of being wrong, is more than financial. It is ego. Early in his career, Cain would cling to trades long after they bled red, unwilling to admit defeat. Each stop loss felt like a personal insult, each loss a scar on his pride. But over time, he reframed it. Being wrong quickly became freedom, not shame. A stop loss is the cost of doing business, he told his students. I'd rather be wrong fast than right eventually. The shift liberated him, turning every exit into a controlled step instead of a crushing blow. Then comes the second fear, the fear of losing money. This is primal, tied to survival itself. Watching capital slip away stings like a wound to the soul. For Cain, the lesson was brutal. After losing 78% in the crypto collapse, he had to face the abyss. Instead of treating losses as theft, he began to treat them as tuition. Like a doctor paying for medical school, every dollar lost bought experience. His account wasn't shrinking, it was paying for education. That reframe softened the terror and gave him courage to keep going when others quit. The third fear is the most seductive, the fear of missing out. FOMO is the market's cruelest trick, whispering that the train is leaving without you. Cain remembered watching charts run while he sat flat, his palms sweating with regret. He wanted to chase, to jump aboard, but he learned the market is eternal. It was here before him and would be here long after. Miss one move and another comes tomorrow. Chase ghosts and you bleed. The cure for FOMO, he taught, was trust. Trust that opportunities never run out. Only your patience does. Finally, the fourth fear, the fear of leaving money on the table. You take your profit, you follow your plan, and then the market runs another 100 points. What once felt like victory sours into regret. Cain laughed at this one. To him, discipline meant gratitude. If I take what I planned and leave, I've already won, he said. The market owes nothing more. Greed disguised as disappointment was a trap he refused to fall into. One trade in particular became his story of conquering all four fears at once. Cain entered a textbook short. Almost immediately, price spiked 20 points against him. The fear of being wrong screamed, "Cover now." But his stop was intact, and he held. Then price reversed, moving in his favor. As it neared his target, he exited, profit secure. Minutes later, the market collapsed another 100 points. The fear of leaving money whispered, "You could have had it all." But Cain just smiled. He had followed his plan, and that was all that mattered. To his students, he turned these lessons into questions. Which fear owns you? Do you hold losers to protect your ego? Do you cut winners too early because you hate losing? Do you chase moves to soothe FOMO? Do you feel regret when the market runs without you? Identifying the fear, Cain argued, was the first step to freedom. But he also taught that fear never disappears. It is written into human DNA. The goal is not to erase it, but to bypass it with rules so sharp, so clear, they override emotion. Cain didn't fight fear with willpower. He replaced it with process. His edge was not just SMT divergence or psychological levels. It was a rule book practiced so deeply that when fear arrived, his hands obeyed the rules instead of the panic. The wisdom bomb of chapter 7 is this: fear is not the enemy, it is the test. The market will always tempt, always threaten, always tease. But if you master your rules, you master yourself. And if you master yourself, no fear can ever own you again. Cain often said the hardest part of trading wasn't pulling the trigger, it was sitting still. Imagine hours in front of glowing screens, the market pulsing with temptation, while your system whispers, "Not yet." For most, silence feels like torture. The itch to click grows, boredom gnaws, and impatience disguises itself as productivity. But Cain embraced this silence as sanctuary. To him, waiting was not wasted time. It was proof of mastery. He remembered the years when he couldn't resist the urge, when he forced trades out of boredom, chasing scraps of movement just to feel alive. Each one ended the same way: frustration, erosion of capital, and another step backward. It took pain to teach him the truth. That discipline wasn't about willpower in the moment. It was about building an identity that valued patience above action. He didn't just practice restraint. He became restraint. Picture him in his trading room at 10 a.m., the S&P surging after open. Social media explodes with calls for breakout longs. Thousands rush in. Cain sips his coffee, eyes calm, posture still. The setup isn't complete. The divergence hasn't confirmed. His model isn't aligned. So he does nothing. Minutes stretch into hours. Others might call the day wasted. Cain calls it a win. Because capital not lost is powder preserved, ready for when the true setup arrives. He often told his students, no trade days are victories. This was radical to them at first. In a world where effort means action, doing nothing felt like failure. But Cain reframed it. Every day without loss compounds your account through preservation. His metaphor was simple. If you fire all your bullets at shadows, you'll have nothing left when the real target appears. The discipline to wait became his edge as much as SMT divergence or psychological levels. His journals revealed pages of blank days marked with two words: no trades. Each was a reminder that success isn't measured by frequency, but by fidelity to rules. To Cain, boredom wasn't a weakness to fight. It was the price of consistency, and he was willing to pay it every time. For his students, he designed a brutal exercise: trade for 1 week, but only if every single condition in your model aligns. Not most, all. If even one is missing, skip it. The result? Fewer trades, but cleaner outcomes. Win rates improved, stress dropped, and the paradox emerged. Doing less earned more. Cain lived like a monk at his screens, practicing patience as identity, not effort. To outsiders, he seemed detached, almost cold. But to those who studied him, he was the embodiment of discipline transformed into character. The market could scream, tempt, and thrash. Cain would still sit, breathing steady, waiting for the whisper of perfection. Every trader dreams of the winning streak, the days when setups flow, confidence soars, and profits seem effortless. But the market has an evil twin, the drawdown, a losing streak so relentless it feels like the market is conspiring against you. Cain knew these valleys well, and he taught that survival wasn't about avoiding drawdowns. They are inevitable. The key was managing them so they bend you without breaking you. He compared drawdowns to storms at sea. You can't stop them, only prepare your vessel. Cain built a framework with hard rules. If 6 losing trades stacked in a row, he cut position size by half. If losses continued, he stopped trading altogether for a reset. Never forever, only long enough to cool the mind. Because the danger wasn't the losses themselves, it was the tilt that followed. Revenge trades, oversized bets, and the desperate urge to claw back what was gone. Cain remembered his crypto days when tilt destroyed him. One red candle after another, he doubled down, then doubled again, until the spiral consumed entire accounts. Futures taught him better. Now, when the storm hit, he dropped anchor instead of thrashing against the waves. Sometimes that meant stepping away for days. Sometimes it meant cutting size so low the trades barely mattered. Either way, he survived. He told students the emotional hangover of a losing streak was worse than the numbers. Doubt crept in like fog. Maybe I don't have an edge. Maybe I was lucky. Maybe I should quit. To fight this, Cain created rituals. He kept a journal, not just of trades, but of emotions. In drawdowns, he revisited his winning streak entries, not to inflate his ego, but to remind himself that edges are cyclical. They work, then falter, then return. His job was endurance. One story he shared often, his worst drawdown ever. 15 consecutive losses, each small within his plan, but relentless. By the 10th, his belief cracked. By the 15th, he was certain his edge was gone forever. But he followed his rules, reduced size, paused, reflected. On trade 16, he finally hit a winner. 17 followed suit. Within 2 weeks, the account not only recovered, it surpassed the previous high. The lesson burned deep. Drawdowns feel permanent inside them, but they are only weather. They always pass. Cain even wrote letters to his future self during winning streaks. Future Cain, if you're reading this, you're in a drawdown. Remember, this is normal. Your edge still works. Reduce size to X. Stop after Y losses. Trust the process. This too shall pass. When the darkness came, he read his own words like a message from a calmer version of himself. A lifeline out of tilt. He challenged every trader to answer a brutal question. What's your drawdown plan? Not your hope, but your written steps. If you don't have one, you're not prepared for reality. Because drawdowns aren't a question of if, but when. Cain's philosophy was simple. Anyone can trade well while winning. The professionals are defined by how they trade while losing. Drawdowns are not a verdict on skill. They are a test of character. The storm separates gamblers from survivors, pretenders from professionals. And Cain, forged by crypto's collapse and futures discipline, had built himself into the latter. Most traders, when they fail, go hunting for the next indicator, the next guru, the next magic signal that promises certainty. Cain despised this cycle. To him, signals were crutches, keeping traders weak and dependent. That's why he built the lab, not as a signal group, but as a dojo, a place where traders were forged through discipline, repetition, and brutal honesty. The lab wasn't glamorous. There were no screenshots of Lamborghinis or feeds full of profit porn. Instead, Cain offered something rarer: transparency. He streamed his trades live. Every win, every loss, every scratch, and most importantly, the long stretches of nothing. Students didn't just watch his entries. They watched him sit for hours, calm, patient, refusing to move until his model appeared. This was the truth of trading: boredom, waiting, discipline. Cain's sessions often frustrated newcomers. "Why aren't we trading? Price is moving. Let's go," they typed in chat. But Cain wouldn't budge. 30 minutes, 45. Then suddenly, the market aligned. SMT, divergence at a key psychological level. Wick confirmation. Manipulation complete. He entered. Within minutes, the trade delivered. But his lesson was never the profit. It was the patience that came before it. Beyond watching, students had to do the hard work themselves. Every member was required to backtest hundreds of trades, journal emotions, and track mistakes. Cain knew the harsh truth: you can't teach someone to trade. You can only show the path. Each trader must walk it. That's why he discouraged dependency. When a student asked, "Should I take this trade?" Cain always answered, "What does your backtest say?" If they pressed, he reminded them, "I won't be there at 3 a.m. when you're staring at the chart. You need conviction, not my approval." This tough love drove some away, but those who stayed learned resilience. They stopped craving Cain's signals and started building their own. The lab had a saying: "We don't build accounts. We build traders." Because accounts can blow, markets can change, strategies can decay. But a trader forged in patience, discipline, and adaptability can survive anything. Cain modeled this himself. His story wasn't a tale of a perfect strategy, but of constant adaptation. From tech sales to crypto gambler to futures master, his edge was never static. What carried him forward was the willingness to keep testing, keep journaling, keep refining. The lab was his attempt to give others the community he wished he'd had when struggling alone. A place where truth outweighed hype, where boring repetition replaced adrenaline, where becoming a trader mattered more than making a trade. One lab member put it best: "Other groups taught me when to buy and sell. The lab taught me when not to trade." That single insight changed careers. Because in the end, Cain believed the greatest teachers don't give you reasons to trade. They give you the strength to sit still when everyone else is thrashing in the noise. Prop firms sound like salvation. Trade our capital. Keep 90% of the profits. Risk none of your own. To a struggling trader, it feels like a golden ticket, but Cain knew better. He held the record for the largest prop firm payout in history: $2.3 million from Apex. And when he told that story, it came wrapped not in celebration, but in warnings. Prop firms, he explained, are not charities. They are businesses. Their model is built on challenge fees, reset fees, and the cold math that most traders will fail. For every Cain who walks away with millions, there are thousands who pay fees endlessly, chasing evaluation after evaluation, trapped in a cycle that feels like progress but leads nowhere. Cain had seen it firsthand. Traders who became masters of passing challenges, but never withdrew a single dollar. He told one haunting story: a man who had passed 23 evaluations, proudly posting each certificate online. When asked how much he had withdrawn, the truth was devastating: negative $8,000. He had spent more on fees than he ever made in profits. Cain called him a professional challenge passer, not a professional trader. This was the trap Cain wanted others to avoid. Prop firms can amplify an existing edge, but they cannot create one. If you don't already have discipline, risk management, and consistency, they will only expose your weaknesses faster. Cain admitted that after passing his first challenge, he felt invincible, free money to trade with. But that attitude nearly ruined him. Why respect risk when you can just reset? Why build habits of patience when another challenge is always a click away? He saw talented traders fall into this comfort zone, failing to grow because the safety net was too soft. Even Cain himself wasn't immune. After his record-breaking payout, Apex froze his accounts. He was too successful, too fast, a liability. Other firms took notice, tightening their rules to prevent another Cain from draining them. That experience revealed the deeper truth. Prop firms want profitable traders, but not too profitable. They need winners for marketing stories, but if you threaten their bottom line, they will protect themselves. The relationship is never equal. Cain's advice was blunt: beginners should stay away. If you haven't proven profitability in your own account for at least 6 months, you have no business taking a prop challenge. For intermediates, he advised extreme restraint. 1 or 2 accounts at most, used as scaling tools, not lifelines. For advanced traders, prop firms could be a bridge, a temporary way to leverage skill while building personal capital. But the end game must always be independence. If you're renting success month by month, he warned, you're not free. You're dependent. To hammer the point home, Cain gave his students an exercise. Calculate how much you've spent on fees versus how much you've withdrawn. Include every challenge, every reset, every monthly subscription. If that number is negative, you're not trading. You're gambling with extra steps. Many students, when forced to write down the math, saw the truth for the first time. Shame turned to clarity. Some quit the cycle on the spot. For Cain, prop firms were never the destination. They were training wheels, useful for a time, but dangerous if left on too long. His millions from Apex weren't the end of his story. They were fuel for something bigger: his journey toward complete trading independence. That was the real goal: freedom from dependency, mastery over his own capital, and proof that his discipline didn't need to be borrowed. The prop firm reality wasn't about chasing payouts. It was about realizing that no external platform could give you what only inner discipline could create. In the end, Cain's story was never about the $2.3 million payout. It was never about one perfect trade or a secret strategy hidden in the charts. His journey was about transformation, from reckless gambler to disciplined trader, from chasing fast profits to choosing mastery, from ego-driven overconfidence to a calm commitment to process. The money was just the shadow cast by the deeper change inside him. The first lesson Cain passed on was commitment. Trading isn't something you squeeze between Netflix episodes or fit into spare time. It demands the same dedication as medicine or law. Cain spent years backtesting, 4 hours every night, every weekend reviewing journals, even vacations filled with market study. He gave up leisure to build skill. Excellence has a price. Most will never pay it, which is why most will never succeed. The second lesson was personal strategy. Cain's edge worked for him because it matched his temperament: patient, methodical, risk-averse. But your edge must fit your own nature. If you are aggressive, build an aggressive model. If you are cautious, build one that protects. Too many traders fail because they try to copy someone else instead of crafting a system that reflects who they are. Cain's mantra was clear: stop trying to trade like another person. Start trading like the best version of yourself. Lesson 3 was risk management. You can be wrong 6 times out of 10 and still win if your risk is structured. You can be right 9 times out of 10 and still blow up if it isn't. Cain's discipline was not just mathematical, it was emotional. He never risked more than he could stand to lose without losing his calm. That emotional threshold is where most traders collapse and where Cain built resilience. Lesson 4. Psychology is the real edge. Everyone sees the same candles, the same indicators, the same news feeds. What separates winners from losers is not the chart. It is the mind behind the mouse. Can you wait through boredom? Can you hold through drawdown? Can you exit with discipline instead of greed? Can you keep your rules when no one is watching? Cain's answer was yes, but not because he was special. Because he trained for it, practiced it, rewrote his identity until patience became who he was. Lesson 5. Consistency compounds. Cain didn't make millions in a month. He made them in hundreds of ordinary months, stacked together like bricks. Small wins, small scratches, capital preserved. The market rewards repetition, not brilliance. The legends are not gamblers. They are plotters who repeat the right behaviors long enough to outlast the chaos. Cain's advice was simple: be boring, be consistent, and let compounding do the exciting work. Lesson 6. Never stop learning. Markets evolve, edges decay. What works today may fail tomorrow. Cain still journals every trade, still backtests daily, still questions assumptions. The moment you believe you've cracked the code, the market begins planning your humiliation. Humility keeps you alive. Curiosity keeps you sharp. Cain's warning was clear. Arrogance is the enemy, and adaptation is the only insurance. At the heart of these lessons is one truth: the market is not your enemy. It is your teacher. Every loss is a lesson. Every win a test. The goal is not to win today, but to still be here 5 years from now, wiser, calmer, freer. The money comes and goes. The real treasure is who you become. You start as someone ruled by fear and greed. If you endure, you become someone who has mastered both. Cain often told his students, "I can give you my exact rules, my exact setups, my entire playbook. But unless you do the inner work, unless you conquer yourself, you'll still fail. Because success is not about what you know. It is about who you are when the pressure hits. The charts are mirrors reflecting your character back at you. Most don't want to look. Cain demanded that his students did. And so, at the close of his story, Cain left one challenge. For the next 5 trading days, take only one trade per day. Maximum. Just one. And only if it meets every single rule in your system. If no perfect setup appears, take none. Track the results. Track your emotions. Track the battle inside yourself. This test isn't about money. It's about confronting the real enemy. Your own impatience, your FOMO, your need for action. If you cannot last 5 days, you are not trading. You are gambling with a new vocabulary. Cain asked his students to type 4 words as a commitment. I choose process over profit. To him, those words marked the difference between survival and destruction, between mastery and failure. The challenge was simple, but its implications were life-changing. His closing call was never about entertainment, never about hype. It was about building a community of traders who chose discipline over drama, mastery over money. His warning still echoes. The market owes you nothing. Not fairness, not profits, not success. But if you show up with patience, respect, and process, the market will give you something far greater than money. The knowledge that you can adapt, survive, and overcome. Cain's story began in wreckage and ended in freedom. But the real question remains, what will you choose? Will you chase shortcuts that don't exist, or will you walk the long, disciplined road? The market is waiting, silent, indifferent, eternal. The decision is yours.